Stephen, so when I look at U.S. 10-year yields, we're just short of the November 2022 highs. Is the stage set for a breakthrough, and where does the natural equilibrium kind of level off in the next few months?
Yes, Yousef. Since that date when we had the peak back in the fourth quarter of last year, rates have actually gone up by 225 basis points. So I would present the case that it's quite impressive that 10-year yields have been contained within a range, whilst the policy rate has gone up by more than 2%. And a lot's been thrown at it in the last week. I mean, in the setup, you were talking about various views that were bearish on treasuries, and also that there's been a focus on the budget deficits, the rating downgrade, Japan's yield curve control shift, that's relevant to China's stimulus. That's quite a lot in the last week and in the last year, and still the 10-year is within a range with all of that thrown at it. So I would present the case that we're probably on a turning point, but a turning point whereby the yields are going to go in the other direction. But of course, this is what you get. You get a bifurcation of views.
So you don't think that we're going to break through the November highs, or if it happens, it's going to be for a very short amount of time? The trajectory is lower for yields.
Yeah, to me, what really matters is where we're going to be in 6 months' time, a year's time from now. I mean, it's very difficult to call this market on a day-to-day basis. I think in a year's time, you're going to be looking at significantly lower yields. Now, of course, in the meantime, the guidance from the central banks is trying to resist that. That's why you hear this kind of forward guidance that's saying the rate's going to stay high for a long time. Because if they said anything else, markets would front run the turning point. So there's this healthy tension between the central bankers and the market that's always there. The market's trying to lead the policy rate, and ultimately I think yields are going to be much lower. We're close to the peak in the official policy rate in this cycle. I think most people would probably agree with that, and the proximity of recession and the risks around recession, that's all increasing.